accounting boffins, welcome to Ashraf Patel with Cost Accounting. Okay, remember you have to go through and recall what we've done in previous lessons, but we always do revision for you so that you understand where we are, what we've done so far. Let's take a look at this here. Remember when we talked about the costs that go into making a product? We said the three components that you will concentrate on obviously will be your materials, right? That's the cost components. Number two, your labor. And number three, your factory overheads. Right, so now you understand, you've already have a good understanding of your cost components, right? Keep that in mind as we go into working out a particular question. Right, in terms of the ledger accounts, we've done extensive revision on this as well, but we're recapping so that you understand exactly what is expected of you in this particular section on costing. In other words, you know what's your raw material stock account? You know that the work in process account brings together the three cost components, right? Also, you know that the finished goods account is the account which then tells you where you derive your cost of sales. And then, obviously, your consumable stores account is your indirect materials, and we've dealt with that one. And again, use your prior knowledge. Remember the section that you've done on final accounts of a trading concern? You've dealt with consumable stores there, treat it in the same way. It's just that here we now apportion the consumable stores to the relevant cost component. Okay. Then, those were the external accounts, and we've shown you in previous lessons how those accounts actually came about. We then have the internal accounts, remember, which we draw up internally, and there we have our 5 cost accounts. Okay, what are they? It's your direct material cost, your direct labor cost, and your factory overheads cost. Now, these 3 cost accounts, clearly you can see, go into the production of an item. In other words, these 3 cost accounts impact on the cost of production, and that is critical to remember. Then you have your selling and distribution and your administrative cost account. Those 2 cost accounts we know impact on the selling part of my product, and they go to my profit and loss account. Okay, so clearly you must be able to distinguish which cost accounts impact on my production, namely my work in process account, and then which are my 2 cost accounts that go to my profit and loss account. Then your normal nominal accounts that we've been dealing with on a regular basis, that you are au fait with, that you know about. These nominal accounts, remember, are accounts that obviously external transaction, from there apportioned to the relevant cost component, and eventually they flow into either your work in process account, or they go to your trading account or your profit and loss account. Okay, that's just the flow of information that you need to know about. Let's look at the question that we have here. You are provided with information relating to Hira's fashion for the financial year ended the 28th of February 2019. So that's your financial year that you've identified. The business makes dresses using imported fabric. They use the Perpetual Inventory system. Okay, now this is important. This is important. When we're dealing with Perpetual Inventory system, once again, draw your knowledge of your previous learning experience. Remember, you dealt with the Perpetual Inventory system. What is the Perpetual Inventory system? In the Perpetual Inventory system, we keep a record of the cost of sales. In other words, the trading account, in terms of where we're dealing with the trading stock account, right? Let me rephrase that. When we're dealing with the trading stock account, we are keeping a record of all the stock coming in, remember, on the debit side, and all the stock that's leaving on the credit side, Perpetual inventory means continuous inventory. We're keeping a continuous record of, in this case, not the trading stock per se, but the raw materials. Remember I said, think interchangeably. Don't think in a box. Think of the other sections that you've done and use that knowledge. So what are we talking about? Perpetual inventory with regards to the raw materials. Okay, and you are told that also in the case of indirect materials, we're using the periodic system. Remember, we have two stock systems, perpetual and periodic. So for consumable stores, we're not keeping a running record of the indirect materials. We just take stock once at the end of the year to determine the amount of stock on hand. Clear? And that's what we refer to as the periodic inventory system. Good advice to you is make sure that you revise these two stock systems so that you know exactly how they operate. Okay, what are we expected to do in this question here? We are expected to prepare the raw materials stock account, the work in process account, and obviously the finished goods account. Now you will notice in nearly every question on this section, these are primarily the accounts that you have to prepare because they form the backbone of this section. In other words, they're the real McCoy when it comes to cost accounting. If you know these three accounts, guaranteed you know cost accounting. Right. Then you're asked to calculate the factory overheads cost and also calculate the gross profit and the net profit. So that's what's expected of you in this particular question, right? So you have a focus now that this is what I'm going to be doing in terms of the required that I have to prepare. What are we told? We are told with regards to opening balances. What are my opening balances? I'm told that stock on hand at the beginning of the year comprised the following. Raw material stock, right? That's the value of raw materials on hand at the beginning of the year. Keep that in mind. It's the raw materials on hand at the beginning of the year. Right. Number two, your work in process stock. What's that one there? That one tells you that when you started your financial year, the value of your materials that were not completely manufactured, that means they were in a semi-state of manufacture, somewhere on the production line, not completely produced as yet. That means they were not in their final stage of production. They were somewhere in the production process, and the value of those items amounted to 57,500. Okay, finished goods stock. These are items that are completely produced. Where are they sitting? They are sitting in the showroom, waiting to be sold. So what's important here, accounting boffins? Understand each of these balances and which accounts they impact on. That's important, okay? And then you are told indirect material stock amounted to 4,800. That's the value of indirect materials that you have on hand at the beginning of your financial period. Okay. What are we told about raw materials? We are told that we're using fabric. These were imported during the year from India, and the details are as follows. The cost of fabric imported on credit amounts to $120,000. Your exchange rate is 15 Rand per dollar, right? Obviously, that would entail a calculation. You pay customs duties on the fabric, and the shipping costs amount to 46,000 Rand, okay? Again, information which you're going to require. You are also told that your raw materials, when you're looking at your fabric, issued for production amounted to 930,000 Rand, and this included the customs duty and the shipping charges. Now, what's important here, you are given the amount of raw materials that have been issued to the factory. Important information, extremely important information. You will see when we actually do the ledger account, how we're going to use this figure in order to determine something else that we require, right? So it may sound like a riddle now, but you will see when we do the actual ledger account, how this figure here slots into my raw materials account, because what are they telling you? They are telling you that this is the actual amount of material that was used for the production process. In other words, this was the value of material that was sent to the factory, that was used in the production process. Very, very, very important. Right. And that figure was 930,000 Rand, and it includes the customs duty and the shipping charges and whatever else we had there. Right. What do we know about indirect materials? We are told about indirect materials that these were bought during the year for 17,200, and the transport costs that were paid out of petty cash amounted to 400 Rand. That means we bought indirect materials to the value of 17,200, here we go, and we paid some amount in terms of transport cost to get the indirect materials to our factory, and that was an amount of 400 Rand in terms of the delivery of the indirect materials to our factory. What do we know about direct labor? We are told there are 4 direct workers who worked 160 days during the year, 9 hours per day at 30 Rand per hour, right? So that's the rate at which you are employing the direct laborers. Important. They also worked 5 hours overtime on 12 days, right? And overtime is paid at a normal rate plus 50%. The foreman was paid a salary of 110,000 for the year. All of this is information that we're going to be using to draw up the accounts that we are expected to draw up. Okay, and then indirect labor, we are told that the cleaner was paid 3,640 Rand per month. This is to be split between the factory, the office, and the sales department in the ratio 5:1:1, and salespersons were paid a commission of 56,000 Rand. So clearly you can see, you now have the relevant information that you require in order to draw up the necessary ledger accounts, right? They've told you about the raw material stock. You were told about all the information regarding the direct labor, right? And you were also given information regarding the indirect materials and the indirect labor. So in this way now, you have all the information required. You can actually now start doing the ledger accounts, right? We are told about factory overheads. What are we told? That factory overheads, electricity and water paid was 27,000 and rent paid was 66,000. The rent for February has not yet been paid. These are to be split according to the floor area. It means this is how this expense will be allocated to the various departments. Remember, you're renting the entire premises, but a portion of it is occupied by the factory, some by the showroom, and some by the admin section, right? And then you are told that at the end of the financial year, you have some stock on hand. It means that you have stock of raw materials. Can you see a question mark, right? Then you are told that's your work in process figure, that's your finished goods figure, and that is your indirect materials. So in these 3 cases, the figures are given to you, whereas the raw material stock is an unknown figure. But don't fear when Ashraf is near. Why? Because you will see exactly how we go about calculating that particular missing figure. Okay, we now have, in the information we are told that your admin cost amounts to that figure, and your selling and distribution cost amounts to the 144,000, and your admin cost amounts to 133,000. Again, information that we're going to require at a later stage. So all of this information is given to you, right? We've been through the information, and you will see now when you come back to us in the next slot how we're going to use that information to draw up the relevant ledger accounts. Okay guys, let's take a quick break and we'll be back in a jiffy. See you just now. Welcome back, accounting boffins. Remember, we're busy with cost accounting, and we said we're going to do the actual ledger accounts now. Right, so here goes. Remember we said it's the raw material stock. It's our raw material stock account that we're dealing with, right? We're dealing with the work in process, finished goods, factory overheads, gross profit and net profit. Just a revision so that you know exactly what is expected of you in this particular question. Okay, now, again, just a flow of information to give you a concept idea of what we're dealing with. Remember, it's from your stock account into your cost account and finally into your work in progress, right? That information is important so that you know how to deal with the information that is required. Okay. In terms of the raw material stock, let's start with that one. We are told that the stock on hand amounts to 80,000 Rand when at the beginning of your financial year. Right, okay. So immediately I tell myself, fine, this is my raw materials account, and here I start off with my balance on the debit side, 80,000 Rand. Can you see that? Stock account, asset, debit balance. Okay, what else do I know? I'm told that raw materials were imported for the year from India. We bought to the value of 56,000. But be careful, 56,000 what? Can you see? There's a dollar sign in front of the 56,000, telling you that you had bought it, obviously, and you paid in dollars because you imported the material. So now what do? You do a calculation. And what's my calculation? My calculation is 56,000, which is the value in dollars, times your exchange rate at that time, when we purchased it was 15 Rand. So you multiply by 15 to give you a value of 840,000 Rands. Therefore, watch here. When you make the entry now, you say, bought on credit, how much? 840,000 Rand. So obviously, it entailed a calculation. They could give you the Rand value as well, but in this case here, you were given the dollar value and you were expected to calculate the Rand value based on the foreign exchange. Okay. The next one you are told about the raw materials is that you paid customs duty on the fabric at 30%. Again, calculation involved, therefore, take out your calculator, right? Here's my calculator. Remember, we paid 840,000 Rand, was the value of the material, the fabric in this case here, and we paid 30% duties on it. So, take the 840,000 times your 30%, and that will give you the value of the duties that were paid, namely 252,000 here. Watch this here. There's my figure, 252,000 Rand. What was that? The customs duties that we had to pay for bringing in or importing the fabric from India. Okay, then what are we told about our fabrics? Let's see, there's something else we are told. We are told that we paid shipping costs to the value of 46,000 Rand. Okay, so obviously that's another cost. Now remember what we said. For raw materials, we are using the perpetual inventory system, meaning therefore that all the costs incurred in bringing the raw material, in this case the fabric, from India to our factory in South Africa, all the costs involved will impact on the cost price of the fabric. Therefore, you will see here, we go into this one here, there's my payment, the 46,000 Rand for the shipping charges. Okay, clearly you can see on the debit side of this account here, I have all the information of the stock, in this case the material, the fabric, all appearing on the debit side. What else do I know? I am told that fabric issued to the factory for production amounted to 930,000, including the customs duty and shipping charges. Now, what figure am I given? Remember, I alluded to this in the previous segment, and I said, watch out, you're going to see this here, and this is where it now appears. As you can see, you do not know the value of your material left over at the end of the financial year. But what you do know is that the materials that were used in the production process amounted to 930,000 rand. So clearly, guys, if that information is given to you, namely the value of materials that were used during this year, issued to production, then definitely the missing figure here would be your closing figure, namely your balance brought down for the next financial year would be an amount of 288,000 rand. Now remember, if they had given you the closing balance, namely the 288,000 rand, then your missing figure would have been the direct materials cost. That's where the value of material that was issued to production. So keep that in mind. Okay, let's move on. So here we now come into the work in progress account. Once again, you start off your work in progress account with the opening balance, which was given to us, right? My work in process stock, 57,500. Therefore, you start off this account with your opening balance of 57,500. Right. Okay, you've got your work in process stock account. Opening balance given. Next, you already know that the figure which relates to the materials that were used, in other words, from your raw material stock account into your direct materials, and from your direct materials into your work in process, there's the 930,000. Clearly you can see that that is the 930,000 rand for the value of your materials that were used. Okay, the next item that you have is your direct labor cost. Again, let's look at the calculation here. With regards to direct labor, what are we told? Let's find that slide that has the information on the labor. Okay. The direct labor, that's the one we're looking for. 4 direct workers who work for a total of 160 days during the year, 9 hours per day, right? So, obviously you'd start off with 160 hours total. Let's do that. 160 hours in total. Okay? Times, just get this. I think that's the best place to put it there. So we had 160 hours, we said, during the year, and 9 hours per day at 30 rand per hour. They also worked 5 hours overtime on 12 days, and overtime is paid at a normal rate of plus 50%. So let's do this here. We've got the 160 days times 9 times 30. Okay, and that will give you 43,200 times 4 will give you a value of 172,800, right? Now remember, they also worked overtime, right? And what was the amount of overtime that was worked? The overtime was on 12 days, and they were paid then the rate of 50% more than your normal time. So if your normal rate was 30 rand per day, for overtime will be 30 plus 50%, so 50% of 30 is 15, so it's 45 rand. Okay, now that you have the 45 rand, okay, so we say 45 rand, take your 45 rand, which was your overtime rate, times the 12 days, okay, and that will give you the 540 times the number of hours. Where's your number of hours here? Let's work out our number of hours. They told you they also worked 5 hours overtime on 12 days, and this is paid at the normal rate of 50%. So in other words, what is important for you to understand, when you are doing this calculation, you take your normal rate, right, plus your overtime rate, you add the two components together, and by adding the two components together, that will then give you your gross salary of whom? Of the direct laborers. And you can clearly see that if we go into our ledger account, your gross salary for your direct laborers would amount to a value of 183,600. So once again, work out the direct labor for the normal time, add the overtime to it, the total amount is what goes into my work in process or work in progress account, because that represents direct labor. Okay, another important component that's not examinable in this particular question, if there were contributions by the employer, then you would add the contributions to your direct labor. It would impact on your direct labor as well. Okay. Now, we've got our direct materials, we've got our direct labor. We now have the third component, which is our factory overheads. Okay, now what we're going to do here, before we go into factory overheads, what we're going to do is we're just going to explain very quickly the finished goods, right? In terms of the opening balances that we have, right? In terms of finished goods, we said these are the goods that we have on our shelves at the beginning of the year, okay? And this would then mean that the value of goods that were unsold at the beginning of the financial year, right? That's my opening balance of 92,000 Rand. Again, it's a given figure. But now remember, you cannot continue with your finished goods account until you have completed your work in process. Keep that in mind. Very important. So it starts off with your raw materials, which you transfer to direct materials into your work in process. Then you have your work in process, which has 3 components to it, namely your direct material, your direct labor, and your factory overheads. Only once you have completed your work in process account can you move on and complete the finished goods stock account. Okay, right guys? So that's your finished goods stock account. What you do know about your finished goods stock account is that you have an opening balance that's given to you of 92,000 Rand. So when you are working through a question, whether it be in the exams or an activity, what you do is put in the given information in the relevant places. So you know, once you've done it, you tick it off and you know that this has been dealt with, and therefore, when you come into the information, you'll be able to see exactly how that information needs then to be completed when we are drawing up these ledger accounts. So put in the given information into, for example, an opening balance and a closing balance. Slot them both in if they are given to you. If they are not given to you, don't stress, it will fall into place once you do your calculations. Okay. Now, let's just look at the information regarding the factory overheads. What are we told about factory overheads? We are told about our factory overheads that, obviously we're going to do the calculations, but let's just look at the factory overheads. We are told, once again, water and electricity paid during the year amounted to 27,000 Rand, and the rent paid was 66,000 Rand. The rent for February has not yet been paid. Clearly you can see here that you are dealing with an adjustment. In other words, the rent that you've paid for a total of 11 months, right? Immediately tells you that you have to now go and do a calculation, right? Again, you are told that in terms of the split, these are to be split according to the floor areas, right? The moment you are given floor area, it is important for you to understand that you first work out the total floor area. In other words, what are we going to do? We're going to add the 150 plus the 40 plus the 60. If you add that up, it gives you 250, right? It's 150 plus 100. So your total square meterage that you're looking for this premises is 250 square meters. Now, you take your calculation and you apportion the cost in terms of what each area is made up of. For example, the factory occupies 150 square meters of a total of 250. Very important. Your office occupies 40 of a total of 250. And your sales department occupies 60 of the 250. So in that way, you can clearly see that your calculation will be dependent on how you're going to take that calculation and work out, and as you will see, we're going to do that. We're going to take the actual amount and split it up between the factory, the office, and the sales department. Okay, what else do we know about our factory overheads? We know that we have indirect labor. Again, let's just identify that information so that we know when we are dealing with it, when we actually come to it, you'll be able to see it. You are told here that, remember where we did the direct labor, there was also information about the indirect labor. Let's just see if we can find that slide for you. We are told here that, let's just find that slide very quickly. There is information for you here. Yes, here we go. With regards to indirect labor, you are told the cleaner was paid 3,640, and this has to be split up with the factory, the office, and the sales department in a ratio 5:1:1. Keep that in mind. When we do the calculation, you'll see that. The salespersons were paid a commission of 56,000 Rand. Be extremely careful about this one here, because your salesperson's commission has absolutely nothing to do with the factory. Remember, you are given information, sometimes there's a red herring to catch you. Are you going to put it in? If you do, it's not only marked wrong, but it's a negative mark as well, and you don't want to lose any marks. Okay guys, what we're going to do, we're going to take a quick break, and when you come back, we're going to actually do the calculations for the factory overheads. See you just now. Welcome back, accounting boffins, right? Cost accounting, we're looking at ledger accounts, calculations, the whole tutti frutti. Right, here goes. Remember, we had to do the raw material stock account, right? We completed that one. The work in process, it's work in process. We're in process with that account because we have some of the information and we need other information. Then we have our finished goods stock account, which is also an account we started with, but we need more information. Right, again, we at the point we're calculating our factory overheads. Remember once again, what are factory overheads? Factory overheads are costs which are associated with the manufacturing process but cannot be directly identified, okay? So these are costs which are appropriate to the product, not easily identifiable, therefore under the umbrella of factory overheads. Okay, and yes, it is a cost account. Okay, now, once again, a reminder for you, your cost components would be material, labor, and factory overheads. Okay. Just another diagram for you, telling you that your material plus your labor plus your factory overheads would give you your production cost. Okay. Remember, we are at this stage here in our work in process where we've identified the opening balance, we've worked out our direct materials, we've worked out our direct labor. We're at the point now where we have to calculate our factory overheads. Let's do that. Okay. Starting with indirect materials. You had a balance of indirect materials at the beginning of the year of 4,800. Opening balance. Right, number 2. Did we purchase more? Yes, we did. Remember, we paid for direct materials, right? And we paid transport for the direct materials. So you add that as well. Less what? Minus your materials, indirect materials on hand at the end of the financial period. So remember this process. Opening stock of materials, in this case, indirect materials, plus what you purchased, plus the expenses on purchases, minus what you have left over. So here we go. Opening stock, plus purchase, plus expenses, minus what we have left over, and voila, there's the figure we're looking for, the amount of indirect materials, that were used in the factory. But remember, the indirect materials had to be apportioned in terms of a particular ratio, right? So keep that in mind. You were told this was a clear indication of the foreman, again, working in the factory, not in the production process. Therefore, that person's wage or salary would form part, it would constitute part of your factory overheads account. How much did you pay your factory foreman? You paid them a total of 110,000 Rand. Okay, now remember this one here as well. When it came to indirect labor, there was a cleaner as well. Right, now what information do we have about the cleaner? Let's see if we got that information on hand. Let's just get that slide very quickly. We are told here that the indirect labor of the factory worker, right? I'm sure this one will help us. There we go. The cleaner was paid an amount of 3,640 per month, right? But had to be split up between the factory, office, and sales in the ratio 5:1:1. So it's 3,640. Let's go to that amount that we have there, and let's show you the breakdown, right? So it's the 3,640, right? But remember, it was 3,640 per month. So step number 1, multiply that by 12. Let's do that. You multiply that by 12, okay? And then what do? Then you apportion it in terms of the ratio which is given to you. 5:1:1. When you get something like that, people, this is what you do. 5:1:1. Add it up, will give you a total of 7. 5 plus 1 is 6, plus 1 is 7. So the factory will get 5/7 of that amount. So in other words, times 5/7. Clear? So that's how you calculate your indirect labor, and that was the cleaner. So you take the monthly amount, multiply it by 12, step number 1, then apportion it in terms of the ratio that's given to you. In this case, 5:1:1. Add 5 plus 1 plus 1 is 7. 5/7, so 5/7 to the factory, 1/7 to the selling, and 1/7 to the admin section. That's how you apportion the cost. Right. What do we know about electricity and water? We were told that you paid a total of 27,000 Rand. Do you recall? Right? Information given to you. We've been through this information. Remember, I also showed you the square meterage. Right? If you recall, the total square meterage was 250 squares for the entire premises. But the factory only gets apportioned its usage, which was 150/250. And that gives you your final calculation. Right? Then we come to the rent. In the rent, you paid 66,000 Rand, but there was 1 month of rent outstanding. So step number 1, first determine the 1 month's rental. So you took the 66,000 divided by 11 will give you 6,000. Add the 6,000, which now gives you your full rental for the year. And then, again, you use the floor space to determine what portion must be allocated to the factory. So therefore, 150 over 250, and that gives you your 43,200. You now have a total for your factory overheads. Important figure. Why? 219,800. Watch. Now we come back to our work in process, and we say what? Let's bring in the factory overheads component of 219,800. Right? So understand that this 219,800 came from a calculation. And just to set your minds at ease, perchance, if you make a mistake with that calculation, but if you bring that figure into your work in progress account, it is marked as a method mark, meaning you will be allocated because you don't double penalize a candidate. So in other words, you will still be allocated the mark even though the figure may be wrong. But yes, you will get part marks, and this is important, guys. This is very important. Show your calculations because you will be allocated part marks for your calculations. Okay. There we go. We've got our factory overhead, so we've got our three cost components. We've got our material, right? We've got our material, we've got our labor, and we have our factory overheads. What do we do now? We bring in our finished goods stock. That means your closing balance is brought in, and this becomes your closing balance, or the figure that you transfer, your missing figure, which you transfer where? To your finished goods stock account. There's it. This is the value of goods that were manufactured for this year. Right. Now, important in this account here, we've got our opening balance, we slotted in. We've got the figure from our work in process. Again, look at the flow. Can you complete a finished goods account without having done a work in process? Certainly not. You must have your work in process figure that you've calculated to transfer to your finished goods. Okay, and this one here, you were also told that there was loss due to theft. That means any loss of finished goods must also be brought into account. Okay, you were told, or you were given information that there was items that were lost due to theft. You lost to the value of 7,500, and watch, guys, you are given the closing balance for your finished goods account, and the missing figure is your cost of sales component, 1245. So in other words, what is critical? What is it that you need to know when you're dealing with your finished goods stock account? Remember, guys, you need one, your opening balance. You need the work in process amount. You need your closing balance, right? And any further information that you have with regards to finished goods. In this case here, finished goods were stolen due to theft. There we had it. Remember, you could also have returns of finished goods. If you go back and think to one of our earlier lessons, we mentioned in the finished goods stock account, you could get a cost of sales on the debit side. Not applicable in this question, but yes, you could get a cost of sales on the debit side, indicating to you the return of goods into our showroom. Okay, so there we have it. We've got all the components. We've calculated our cost of sales figure, right? Which is necessary because obviously there's something else that we have to do. And what is it we have to do now? We are asked to calculate, so in terms of this, done and dusted, all sorted out, we now have to calculate the gross profit and the net profit. We are told the markup is 60% on cost. Okay, so here goes. We're going to use this information that we have here. We are told the admin cost amounted to 133,000 and your selling and distribution amounted to 144,000. But firstly, we have our gross profit, right? And how do we calculate our gross profit? Remember, we have our cost of sales of 1,245,000. Let's go back and see where did we get that information from. There we go. Our cost of sales was 1,245,000. Obviously, you're using a markup of 60% given information. Therefore, you would take the 1,245,000 times your 60%, right? in order to work out your gross profit, okay? And your gross profit works out to 747,000. Clear? Once you have your gross profit of 747,000, remember, your sales minus cost of sales gives you gross profit. But in this case here, you had your cost of sales and you were told that you're using a markup of 60% on cost. Therefore, you multiply that by the 60% to give you your 747,000. Clear? That's your gross profit. Okay, what do we do with the gross profit now? Very interesting. We take our gross profit, in order to do the net profit calculation, you take your gross profit minus the two cost components that were not dealt with in production. What were they? Selling and distribution and your admin cost. And yes, you were given that information. There's my admin cost of 133,000. There's my selling and distribution of 144,000. Therefore, we take that gross profit, your GP, minus your admin was 133, admin cost, and your selling and distribution cost was 144 to give you a net profit of 470,000. Okay, so clearly you can see, in order to calculate your net profit, firstly gross profit. Once you have your GP, which is your gross profit, you subtract your two cost components, namely selling and distribution and your admin cost. Okay, now finally, guys, what have we done in today's lesson? We have completed the ledger accounts. Which ones? Your raw material stock, your work in process, and your finished goods stock account. Okay, we then went on and completed the factory overheads cost. Just a bit of information here. You will notice that sometimes you can't complete the work in process until you haven't done the factory overheads cost, that particular calculation. So get the order right. Once you've completed all the cost accounts, you can then complete the work in process account. Okay, and then finally, we did a calculation of the gross and the net profit. Just to recap there, firstly calculate your GP, which is your gross profit, then you subtract your two admin costs, your admin cost and your selling and distribution cost, and that will then give you your net profit. Okay guys, we've worked extremely hard in today's lesson, making sure that you understand cost accounting. From me, Ashraf Patel, and the team, until the next time, keep your feet in the ground and be good. Bye-bye.